oil prices opening a little bit softer in Asia this morning. If you like, a sort of a after the initial sugar rush, or shall we call it the lollipop rush on Monday morning, the prices have sort of sobered back to kind of pre-OPEC meeting levels of, at least on Brent, in the sort of mid-70s, or give or take a little bit. Everybody has to have a chance to comment on the big news of the week. It is Thursday, but the momentum out of the big OPEC decision is still lingering, and I'd really welcome everybody's views on that, because of course the legacy of it is this sort of question mark now of the Saudi 1 million barrel a day cut. The sort of the only really tangible takeaway from the meeting in the immediate sense was this commitment by Saudi to unilaterally cut their oil supply in July next month by a further 1 million barrels a day for 1 month, and the outlook for that continuing, I suppose, is where the next big question mark arises. But I welcome everybody's view. We've got to sort of literally span the globe this morning. Let's start out in the wilds of Asia, far Asia, in terms of Peter McGuire in Sydney. Peter, Chief Executive Officer of XM Australia. Peter, your thoughts 4 or 5 days later, having a sober reflection on the weekend drama.
Well, good afternoon, Sean. Good morning, Sean. Good morning, fellow guests. Greetings from Sydney. Yeah, it popped heavily on Monday morning, and I thought, here we are off to the races, up 4.5%. And it's, 9 o'clock, 10 o'clock Sydney time. So where you are, it's like 2 a.m., 3 a.m. Dubai. And then if you're further east, or pardon me, further west, then, you're probably seeing that late Sunday night. And it popped heavy. And I thought, wow, here we go. And the shorts would have got absolutely spanked. And it gave up a little bit of that later in the day. It came back about 1.5% or so. And it's still a reasonably very strong Monday. Where I sit here, as you mentioned, 76.80, Sean, for Brent, 72.25, 72.40 for WTI. I'm curious to see how Saudis play out. I understand that the UAE or the Emirates were the winners in a lot of ways. They got an extra 200,000 barrels a day of production. And the other side of it, Russia didn't get crimped. There was no real talk there. So I sit here and go, as far as my understanding is, Saudis want 80 to 85 to 90, and see if we can do it. US dollars coming back, Sean, at 104. And it's giving up a bit of heat, but we've got a big week ahead of us next week. Maybe Jay Powell and his team might ratchet it up again.
Peter, Rod makes a good point there. I mean, ultimately, this market, it would appear, is not really focused or concerned about supply right now. There seems to be enough oil around for everybody. This is a question around demand. Where is demand going?
Well, when you ask that, Sean, I mean, I'm just looking at some notes here. China's May crude imports jumped 12 to 12.2 million barrels a day, up 17% from April, and up 12% year on year. So let's park that, but that's not, that's not a negative number. That's up 12%. That's one hell of a big shoot to the upside. So there's that side of it there. Now, if we look at iron ore consumption and, their import, and that's a big concern to Australia, but it's a fairly extensive overview of the world when you're thinking as far as steel. I think their biggest month ever was March or April, China from Australia. So from an import sector. So either someone's not telling the true numbers, or I think appetite is still very strong, Sean. And I think Saudis, building on exactly what Rad said, and to some point Narendra, we are sitting here scratching our heads, and I think so are the Saudis. They just want to see oil prices. I don't think there's any way out of it with another $10 strapped to it at least. And I think we're going to achieve that over this summer period.
Peter, the other issues you mentioned in your earlier comments there, which have sort of fallen to the background with the debt ceiling crisis and now the OPEC decision sort of grabbing the headlines, but there is this thing called inflation and interest rates tightening. You mentioned the Fed meeting next week, the possibility of this tightening further and the impact. What's your views on that?
Well, I've just run Australia in the last couple of days, Sean, to bring everyone up to speed. We had April inflation running at 6.3, and everyone was saying that we'll probably see a 5 handle, and I think the most consensus was 5.9, maybe a 6. Well, it shot to the upside 6.8. So that really hit everyone between the eyes. Then on Tuesday, we had a rate rise of 25 basis points, our highest since April of 2012. And then yesterday we had GDP come out at 0.2. So it's soft here, and unemployment numbers are starting to hit from 3.5 to about 3.7. So that's an interesting examination of Australia. If I look at the US, obviously the inflation story, if I look at through the lens in Australia, it's not under control. It's actually getting worse. So I want to see the numbers come out of the States. I think that Jay Powell's got his hands full, and there's a lot of backlash across mid-America and Main Street with the inflation and the cost of goods and what the consumer is experiencing. And if Jay Powell doesn't move, and they're saying it's going to be about 80% probability of no rate rise, then that 20%, I think I'm going to sit in the 20% bank that'll probably see a rate rise by the Fed. So
what do you think? What do you make of this new term skip, the skip language that the Fed will pause for one meeting because they have very quickly another meeting in July. Instead of a 2-month gap now, there's only another month to the next meeting.
Well, that's right, Sean, and everyone's saying that they might be that skip, but I wouldn't be surprised that you see an uplift. But, I think it's just the market, the US dollar's come under a little bit of pressure to the downside. It's back at 104. There's nervousness across some of those big stocks. Really, it's only the 10 out of the S&P 500 that are performing incredibly well. There's 490 that are languishing, but they're just such monsters that are spitting out cash by the handful. So the traders are looking at an interesting week ahead. That's all I'll say.
And of course, you had the very robust jobs numbers also last Friday, which kind of got smothered by the OPEC weekend. But ultimately, there's a lot of indicators there that would, give some, you would think, more fuel than 20% for another rate hike.
Well, that's right. It went from 190. Consensus was 190. It shot to the upside 339,000. So it really hit everyone between the eyes. But people are even saying, well, it's people getting second, third, and fourth jobs. So there's well, there you are. So there's many ways to unpack or pull apart the artichoke. So it's an interesting test case at the moment, and I think this summer is going to be quite fascinating for the US.
Let's go to the survey question, which sort of touches on some of the themes we were talking about in summary. We sort of have spent much of the first half of this year with this year of two halves narrative, where Asian demand is expected to drive up oil prices in the second half with the cycle of the annual calendar of demand going into the next winter. Do you still subscribe to the year of two halves narrative, where Asian demand will drive up oil prices above $80 in the second half? At what point you might say December 30th, yes, but nonetheless, does the second half, this year of two halves narrative, still survive? Peter, last word with you and the survey result. I wanted to get your thoughts. So it's a 50-50. Wow. That's more or less where the market's at. Nobody has any idea. Peter, a lot of focus, of course, always on, and as it should be, China, Asia's biggest economy, the second biggest economy in the world, maybe the first when you take it on purchasing power parity and so forth. But Japan seems to be the one we should be paying a bit more attention to. Your thoughts from the economic outlook of Japan? Obviously, we've had the big story with the yen weakness this year, but everything seems to be moving in a positive direction there after some decades of stagflation and challenge. Your thoughts, just wrap us up today on that outlook for Japan.
Well, a quick history lesson, Sean. If we look back in history, at 1989, 39,000 for the yen, and then it crashed to 8,000. And I'm looking the Nikkei,
you mean?
Oh, the Nikkei, sorry, pardon me, the Nikkei. And now it's 31,641. It's just been absolutely on fire, and the last couple of months have been electric since really Christmas. So the Japanese economy, I think we've given up a little bit of steam on the yen, back at 140, and you might see it back around, that 141, 142, but it's going to be choppy. But the overall momentum to the upside for the Nikkei has just been extraordinary, and think in a lot of ways it'll probably continue. There seems to
And
be
the
a lot of
ultra easing policy will continue on the
Yeah, I
central
think
bank?
so. I'm not looking for any surprises in the short run. Inflation's not really that much of a concern, and they've got. I think it's just booming at the moment domestically. I spoke to Tokyo the other day, and the general mood on the street is one of a fair degree of positive tone. So there's the momentum at the moment. Let's see what happens globally with equities over the summer, and if there's a washout, then it'll take Tokyo with it. But it's too early to call that yet.
I was driving into work yesterday, and there was talking about, as it is this time of year, travel, expats leaving the hot Gulf and so on. And it was like, where is the destination of choice this year? There's always one place, the new trendy place where people are going to. And the travel expert said, it looks like it's Tokyo. Everybody seems to want to go to Japan. That was his take. So I thought that was interesting. Why wouldn't it at 100 or 140 yen to the dollar? Probably some good value.
Absolutely, Sean. It's a great city to travel to, and it's the 34 million people make up Greater Tokyo. So it's exciting, and everyone should visit it.
We'll have to wrap it up there. Again, the sort of stubborn oil price hanging in its mid 70s. It's new barnacle on a rock, and unless there's something quite significant, it doesn't look like it's going to change. We'll have to wait and see. Rad Al-Qadiri in Washington, D.C., thank you so much. Narendra Taneja in New Delhi, thank you so much. And Peter McGuire in Sydney. We're all around the world this morning in 30 minutes. Not too many people doing that on podcasts. Thank you, guys. All the best.